All right, all right, all right. I think this video is going to put a lot of folks at ease. So I wanted to make something to send out to folks who may be in a state of panic. We had a CPI and inflation report come out today, 7.5%. Mortgage bonds reacted very negatively, meaning rates went up. And what it is that seeing that inflation is as high as it is, 7.5%, the highest reading in 40 years, since 1982. The market's reaction is that the Fed is going to have to take, substantial action in the future. They're going to have to raise the Fed funds rate a half a point in March in order to quell inflation. So mortgage rates are going to go up, right? All that fancy talk, all I want you to get out of this is, are mortgage rates going up? Yes. Did we expect them to go up? Yes. Is it the end of the world? No. If you look at this chart right here, this is since last March, right? And we've gone up significantly, especially in the last 6 weeks, right? Where in December, we were in the low threes. We're up to 4% in February 2022. This is an average that's taken from lenders across the country on a 30-year fixed rate mortgage. I think this average even has like 0.4 points built in. Know that depending on your specific scenario, you may be a little bit less, you may be a little bit more, but for all intents and purposes, the 30-year mortgage is 4%-ish or more, unless you want to pay points to buy that rate down. Here's what you should remember. If you're a home buyer, or someone looking to refinance, either way, and I'll focus in on buyers right now, do not let 4%, 4.25%, 3.875, whatever the number is, detract you from your goal of home ownership if that is the goal. Truth be told, was 3.25% better? Was it a cheaper payment? Sure. But is that $100 difference going to erase all of the reasons why you wanted to buy a home? You wanted debt pay down, you wanted future home appreciation, you want to build your net worth, and you know that the net worth of a homeowner is 45 times higher than the net worth of a renter. None of that stuff changes, right? Your payment changes a little bit because the interest rate is higher. But let's go back, and first I did 5-year, and you can see that we're better than a lot of points, back in the end of 2018. People don't remember, rates got, and we'll get my big head out of there, rates got all the way up near 5% in November and December of 2018. The sky didn't fall, the world didn't end, houses didn't quit selling. If you want an even better look at how good we're doing right now, look at this one. Back in the early 80s when we had 18% 30-year fixed. Look at how low we are historically. And I know it's a BS metric that's probably been said too many times by mortgage folks and by real estate folks. We got historically low interest rates. All I'm saying is that 4% rate on 30-year fixed money is amazing. The reading today should be a reminder of that. The 7.5% inflation reading, right? We're able to borrow money at a lesser rate than inflation. So you're going to borrow money over a 30-year time span. You're going to make next year's payments, the year after that, the year after that, all at this set fixed price, even when your dollars are losing value over time. That's what inflation is. Today's dollar is worth less in a year from now, right? You can't buy as much with it a year from now. You're still going to be able to make your payments with that same dollar, though. That's the cool part about borrowing 90% of what you're buying and only putting down 10% of your own today's dollars. The other 90% you're borrowing are future dollars, cheaper for you. So anyhow, that's today's rant. Rates are up. It's unfortunate. For some folks, it might be right on the brink and you're max qualified up to $400,000. And this might make it to where you're only going to be able to buy something to $385 or $380. But all in all, rates are still fantastic. Don't let this deter you from buying a house. And, certainly, it's not the end of the world to have a 4 in front of your mortgage interest rate on a 30-year fixed rate mortgage. So any questions at all, please feel free to reach out. We're more than happy to help. If you're currently working with us, shoot us an email. If you're looking to get started with us, go to greatmortgagebroker.com, fill out a form, let us know where you're at, how we can help, and we'll be in touch soon. Thanks. Bye-bye.